Hello guys, today we are going to analyze the gold market for entire this week. And in the daily time frame we must have a long-term view. For example, in my last video I told you that probably you will see prices start going down because of some reason, or prices start going up to tap into the supply zone, and if we see an entry point we can go for the short trade, but we need to be careful about this equal high liquidity or this liquidity here. But I don't have any analysis for the daily time frame, but you can go and watch my previous video to understand what I told you in the daily time frame. So right now let's go in the 4-hour time frame to see more details. Actually, in the last week you guys could go for a great short trade from here, and your first TP would be here and your last TP. And right now, as you guys can see, prices tap into this dimension that we had, and actually we have the equal low liquidity, so we really need to be careful about this one. And price was creating the equal low liquidity and equal high liquidity, and because of the news that we had and some reasons in the lower time frames, price started going down rapidly. And again, price just give us the hidden 4-hour time frame supply zone, and as you guys can see, price respect into this hidden supply zone for many time. So in this week, if you see that prices start going up, if you see that prices start going up, probably you will see that price, sweep this equal high liquidity and tap into this supply zone here. This range of price for me is really important because especially this level here and these two level here. So for example, if you guys see any entry points here, you can go for the short trades, and you really need to be careful about this equal high liquidity and this swing liquidity here. So for example, if you see the entry point in the lower time frame, just set your stop loss above this equal high liquidity, for example here, but you can go for the good short trade. Or let me just clean the chart. Or it doesn't matter if you see that price reject this supply zone here and you didn't see any entry points, you can go for the short trade here in this supply zone. So for the long trade, again, we have a good idea. For example, if prices start going down, you can see that price sweep this equal low liquidity and this liquidity here. We have a gap and we have this important range of price in the 4-hour time frame. So if we see any entry points, in this range of price, we can go for the long trade. And this one is really great because, let me just clean the chart, I'm sorry. We can go for the long trade. For example, prices start going down, we have the break of structure, so price just need to give us the new low. So price will give us the new low into this dimension here, and after that price need to create the substructure. So this is a good reason to price come down, fill the gap, give us the new low and start to going to make the new lower high. So we can go for the great actually long trade here too. And again, I don't know, for example, here we will see some kind of hidden supply zone, and again we can go for the new short trade to target this low here. So we have this scenario for the 4-hour time frame, or probably you will see prices start making consolidation between this range of price here. Yeah. So again, you can go for the long trade here or short trade here in the lower time frame. I will explain to you guys. So let's go in the 1-hour time frame. So it's really seems like the 4-hour time frame, but except this supply zone and this gap. So again, if we see prices start going up, the 50% of this gap is really important for us. And once you can go for a short trade, but if you see that price start going up rapidly, so you will forget about this one and you will focus on the supply zone here, and these two level of price are really important for me. And again, probably you will see that price sweep this equal high liquidity. So if you see your entry point, please set your stop loss, for example here above this equal high liquidity, or probably you will see price reject this supply zone to go up and tap into this supply zone here. Actually, I want to go in the short trade if I see price reject this supply zone here. Or again, for the long trade, once you will see that price sweep is equal to liquidity, and this range of price actually can be really important for us. I'm sorry, yeah, let me just show you with the line. Actually, this range of price can be really important from here to here, and between this range of price is really important. So one tap and suddenly start to going up maybe. So here is important for us. So once you can go for a line trade if you see that price reject this range of price. So probably price just want to come down more to fill this gap here and tap into this timing zone here too. So once again you can have a chance to go for a line trade here if you see any entry points. So we have these two scenario for the 1 hour time frame, and let's check the 15-minute time frame. It's really similar to the 1 hour time frame, but as you guys can see, you can check some dimension. For example, one dimension here, one dimension here, and after that we have that huge gap. So let me just zoom in. Yeah, probably you will see price come down, tap into this dimension. We have some equal low liquidities here. If you see an entry point here, you can go for a line trade, but I don't suggest this dimension. And you guys know, if you see price start to going up, probably we have a supply zone here. So we have this supply zone here, and actually you can go for the short trade into this range of price, and this is the important level for me. So let me just remove this one. Yeah, it's really similar to the 1 hour time frame, and I hope you guys enjoy this video. Thanks for watching.